Well, folks, I have the very unfortunate news to deliver to you here on May 19th, 2022, that it is official. The real estate collapse has officially started. I'm going to share some things in this video with you that basically are not publicly available information. I'm going to share some things that are publicly available information and show you exactly what's going on. It is official. The race has started, and the real estate collapse has started here. And so I'm going to discuss how this is going to play out. I'm going to discuss, I'm going to tell you my 2 cents on all this. And, a lot of people are wondering, like, how bad will it get? When do you step in? What about real estate related stocks, right? The home builders, those sorts of stocks, like what type of devastation are we talking there? When are those stocks buys? So we're going to, cover all this in this video. But if I had to do the Grim Reaper meme, right? So first they destroyed your cash, right? Inflation destroyed your cash. Then the crypto market was destroyed. And so, Then the slaughter market was destroyed, right, which is the stock market. I call it the slaughter market. Until we get to a better place with the market, it's the slaughter market, okay? And now the knocking on the door is for real estate next. And it's officially started. I will say that, okay? So first off here, this is where I live, my main house, Las Vegas, right? And, obviously prices have gone insane for the past 18 to 24 months. I think everybody knows that, right? Since about summer of 2020, it was like prices went to the moon. Between you had remote work, you obviously had a ton of California people who move out here. Like this whole new neighborhood I live in, Californians everywhere in this neighborhood. Simultaneously, you had these super low interest rates where people were locking in 30 years at like 3%, 2.7, 2.8%, like numbers that you could even fathom, right? And so this was a huge boom for obviously Las Vegas real estate, and it's been amazing, right? But I mean, let's be honest for a moment. Las Vegas, Henderson, Paradise, Metro home values have gone up 33.3% over the past year. Let's be honest, that ain't sustainable. That's that's just ridiculous, right? Now, here's the deal, okay? I just got off the phone with the folks from the real estate company I work with, I guess you can say, okay? And this is the company that is like the most prestigious in all of Las Vegas. These folks have 80 listings on the market, okay? 80 listings. These listings are all the way from about maybe $800,000, $900,000, all the way up to about $20 million. 80 listings. They had a total last weekend of 2 showings. 2 showings. For 80 listings. When I got that news, I was like, oh my gosh, it is getting so much worse, so much faster than even I anticipated. Because I've been saying this whole time, hey, this summer, real estate's going to weaken big time. We're not even in summer yet. And when you got 80 listings and you're the premier company in this market, and you only have 2 showings for an entire weekend on 80 listings, that's I don't even know how to explain that. Anybody that knows anything about real estate, that's ridiculous. Like you're telling me you're the premier company in the whole market, had 2 showings and they have 80 listings? Come on, man. Like I said, this is getting so much worse, so much faster than even I had anticipated, okay? Now, mortgage rates have been flying up, right? We entered this year in the 3s, and now we're at a situation where we're already over 5.5 national average. We're probably on our way to 6 or 7, at some point this summer. And so because rates have gone up so quickly, along with a pull forward in demand, simultaneously with crypto wealth and stock market wealth being nailed, simultaneously with stimmy gone, when you add up all these things at once, and then you obviously had the mortgage moratorium situation all go away, when you have all this hit at the same exact time, there's no way you can be bullish on real estate, essentially, right? It's just a question of how bad is it going to get? How bad is this situation going to get? And from what I'm hearing and seeing, it's getting really bad. Look at this. Existing home sales fell in April to the lowest level since the start of the pandemic. This is the thing. This is just the start. Like we're just at we're not even in the first inning. We're still in the pregame. Like the game's about to start. Okay, like they're singing the national anthem right now, and it's like, okay, this game's about to start. That's the stage we're at in this, and every single metric number you're going to want to look at for this entire year, at least, if not into 23, is going to get worse. Week after week, month after month. You might get some glimmer of hope for a week or something like that, and then it's right back down. You might get some glimmer of hope for a month, and then it's right back down to worse than it was. This is what you're seeing this for headlines. It's just going to get worse and worse and worse. This is always going to be one of the most important things you could ever look at for real estate, okay? U.S. mortgage applications have decreased for the first time in 3 weeks amid a continued surge in mortgage rates. Mortgage application volume fell 11% for the week over week. Now, this is the biggest, kind of decrease there since 2009. Refinance and purchase applications were also on a downturn, down 10% and 12% respectively from the previous week. For borrowers looking to refinance, the current level of rates continues to be a significant disincentive, says MBA's did I say NBA? Okay, MBA's Associate Vice President of Economic and Industry Forecasting. Purchase applications fell 12% last week as prospective home buyers have put off buying with higher rates and worsening affordability conditions. Once again, they're singing the national anthem right now. This is just the start. We're about to enter the first inning, okay? Now, Wall Street knows something here, okay? Wall Street knows something. And I think it's always, you got to kind of say, like what do they know, right? What do investors know about what's going to transpire here, right? Because there's certain things that are going on from big money that they know something's happening, right? They know something's about to go down here, essentially. And the reason you know this is you start looking at the home builder stocks. Look at Pulte Home. This stock is down 25% year to date. Now, Pulte Home is going to have put up great numbers in 2022 because of the backlog of home orders, right? But Wall Street knows that in the back half of this year, Pulte's going to run into problems when it comes to new home sales, new home orders. That's going to be an issue. And so that's why this stock is down 25% year to date so far. Lennar is down 35% year to date, one of the biggest home builders in the United States of America. 35% year to date. Their numbers are incredible right now. Their PE is a 5. But Wall Street says, we're not going to touch that stock for a second. We're not even going to think about it. Toll Brothers stock. This is the highest end player in housing, essentially. And I really like Toll Brothers. Always been a very well-run company. But it doesn't matter how well-run you are if you're in a horrible market or about to go into a horrible market. Like, your stock's going down, your revenue's going down, your net income's going down, your margins are going down, everything's going to go down for you. And that's the situation Toll Brothers is about to get themselves into. And that's why the stock is down over 33% year-to-date. 33%. And you look at their last quarter was probably the best quarter in the company's history, or certainly up there. So you got companies reporting the best quarters they've ever had in history, and yet all these stocks are near or at 52-week lows. And you say to yourself, how is that possible? How are all these stocks having these unbelievable numbers, best in the company's histories, and a lot of these companies date back decades, and yet their stocks are at 52-week lows? And the PE ratios are like 4, 5, 6. Like, come on, man. It's because Wall Street knows what's about to happen in real estate, and that all these new homes that are being built right now, the orders are going to dry up for the next homes to be built, okay? Not just that. These home builders could get themselves into a real pickle. Because imagine you're building a house right now. That house isn't ready for another 3 months, 6 months, 9 months, whatever, right? Mortgage rates continue to go up. And all of a sudden, that client can't close on that house. And all of a sudden, you're sitting there as a home builder with this house. And simultaneously, there's not the demand to sell that house at that given moment. And so as a home builder, you just spent all this money on this house. You built the thing, and now you got to sit on it, and you can't sell it to anybody because there's really no demand at that time, right? Because once the fear starts here, it just breeds more fear, right? And when credit starts to dry up, and rates are in a bad place, because when it comes to rates, if the Fed doesn't come to the rescue anytime soon, it's going to get really, really ugly really, really fast here. You look at a stock like Home Depot, right? Folks look at this and like, Home Depot's reporting incredible numbers. Their last quarter was near perfection. How is this stock just going down? It's down almost 30% year to date, right? And, pretty much at a 52-week low, if not multi-year low on Home Depot now, right? With Home Depot, they benefit massively from people like remodeling their homes, putting money into their homes. And when people like to do that, it's because their values of their properties are going up. So it makes them feel good. And so if you're going to put in a new floor and you're going to buy that flooring from Home Depot, you're going to do that. If you're going to paint the house, it's psychologically, when your home value is going up, you're much more inclined to do these sorts of things, right? Well, all that's about TV Road. This whole kind of like, let's spend money on the house because, we're spending a lot of time at home because, of Rona, right? That's all gone away. But simultaneously, when all of a sudden your home is worth less and less and less, you're kind of like, what the hell do I want to put money in this place for? All the value just keeps going down. I look at Zillow and it's down another 10,000. And so you go from like this psychological, like, yeah, let's put money in it because we'll get it back out. To all of a sudden it's like, no, it's just getting worse and worse and worse. My dad, he's been in the pool business since the 90s, and he'll even do like remodels and things like that, right? And, people are much more likely to remodel their pools, which basically just, you chip the whole pool out, put a new face on the pool, and, it's usually many, many thousands of dollars to do something like that. People like to do that, and he's a lot busier when home values are going up because they say, hey, I put 5,000-10,000 into this remodel. That's fine because I'm going to get that back out. Well, if all of a sudden your home value is going down and down, you're like, I'm going to spend $5,000 or $10,000 on this remodel? Heck no, I'm not going to spend that sort of money. So unless you're a baller like that, right, you're like, I'm not doing this. And so, and even the people that are ballers, they might be spending money on different things during that time, right? So these are things to consider. You look at RH. RH is a high-end furniture company, right? And, all the furniture in my house is RH. And this stock's down almost 50% year to date. Almost 50%. It trades at a very cheap PE. They've been putting up record numbers pretty much in the company's history. But you can't find a soul to buy RH right now. And you likely won't be able to. And the reason being is high-end housing is slowing massively. And when homes, like, why does somebody go buy RH? Usually because, like, they bought a new home, right? Look at my situation. I bought all RH furniture because I bought a new home. That's when people are very incentivized to go shop at RH, right? Or any furniture store for that matter, right? RH is just kind of the highest end. And so that's what happens. But if all of a sudden home sales aren't there and people aren't buying those new homes, guess what's going to happen to RH sales? And all of a sudden they're in a situation where they're like, where are the people? Like, no one's coming in to place orders. Like, what's going on here, right? And it happens really quick, and that's why RH on their last call, they basically told us that, new customers coming in had fallen off a cliff. It was down like 10 or 12%, they said on their last conference call. What's going to be on this conference call? You almost guarantee it got worse. Especially with home sales continue to go down. And so RH is at the end of the day, they're kind of a victim to the real estate market. They are, and they're also a beneficiary. And real estate's great. RH can do great. But when real estate's bad, furniture companies do bad. And RH is no different, right? They just happen to play on the highest end of the market. You look at a stock like Rocket. And this is the biggest mortgage lender in the United States of America, and actually by a quite significant margin. And when it comes to Rocket, this stock's down 43% year to date, or in the past 6 months, down 43% in the past 6 months. The stock's already been leveled kind of going into the last 6 months. And when it comes to Rocket, who wants to buy Rocket stock right now? Seriously, I look at that stock and I'm like, maybe it's a 2023 play if the stock's still, $5 to $10 range. Maybe in 2023 I'll step in, but I'm not in a rush because here's the thing. When it comes to mortgage rates, they're not going to magically fall back down to 2-3%. That's not happening. And if that was to happen, it would be because the economy was in shambles. And if the economy's in shambles, guess what? Mortgages still aren't doing good. And so, even if you had rates fall to that, everybody that already wanted to do a refinance has already done a refinance. So, Rocket's in a no-win situation for at least 12 to 36 months. They're in a no-win situation for 12 to 36 months, in my opinion. And so I look at that company, I'm like I actually like the company, but I ain't buying the stock. No, because they're going to be in a bad place for 1 to 3 years to go in the future. And, their numbers are going to be, much worse in 22 than in 21. And there's a high probability they'll be even worse in 2023 than they were in 2022. And that's tough. That is really, really tough for a company like Rocket, right? JP Morgan is one of the biggest mortgage companies in the United States of America. They're usually around 5th or 6th. And JP Morgan, this stock's down 26, 27% so far year to date. JP Morgan, this is one that Wall Street is probably looking at and maybe even has some credit concerns and some of those sorts of things. My gosh, there's a beautiful sunset going on. Maybe I'll show you guys in just a moment. It's looking beautiful back there. That's all I'll say about that. You guys probably can't see it, but it is primo. But when it comes to JP Morgan, Wall Street doesn't want to own this, and you could get some credit worries here. Ugh. Now, the interesting thing with JP Morgan is look where this stock is at right now. It's at $118 a share. That's where the stock peaked in 2018 several times. See those two peaks right there? That was at 118, all right? And so this is a stock that's basically bouncing at those exact levels of 2018. And, could it fall back down to those Rona prices of like $80, $90 a share? It could, if the economy gets much worse and if people aren't paying their credit cards, if some of these loans go bad, things like that, then if that was a situation, there's no doubt JP Morgan could go back to $80, $90 a share. So that JP Morgan's really going to be dependent upon how the economy does. But I can tell you, it's not a pretty situation. And let me also address this. Could JP Morgan go under the Rona lows? And actually, I'm a shareholder of JP Morgan. I'm a customer of JP Morgan. Could JP Morgan fall to below $80, $90 a share? Yeah, it could. I'm not going to predict that's going to happen, but it could definitely happen. If we start getting a lot of worries around mortgages, auto loans, credit cards, bills not being paid, unemployment starts to climb, that's how you get that stock to all of a sudden be a $50, $60 stock. And it's like, how does this stock lower than Rona, right? Rona had the Fed, giving everybody a break. This is not the same situation, right? And so that's kind of a situation there. Wells Fargo, the stock is dropped off a cliff, obviously, so far this year. But I just thought it was interesting. In the past 5 years, Wells Fargo, by the way, is usually number 3 or number 4 biggest home loan company, somewhere around there. Stock's down over 20% in the past 5 years. The past 5 years. That's incredible, okay? Now, I want to address this in just a moment here, but I feel like, it's probably not going to do it justice. I feel like it doesn't show up as nice on the this as it is in real life, but as many things in real life, it's better in real life than it is in fake life, right? So, this is my housing stocks list: Rocket, RH, KB Homes, Lowe's, CCS, Home Depot, Toll, Lennar, Pulte Homes, and then this is like a rental company. I can't step in any of those stocks anytime soon. All these stocks are right around 52-week lows. I can't step in any of those. No way. I don't see housing being in a good place for potentially years, at least a year, but maybe even potentially several years. And so, although those stocks are all at 52-week lows, I don't think it's impossible for Toll to go to $20 to $30 if this real estate situation gets really, really bad. I don't think it's impossible for Lennar to go to $50, $45. When these companies start reporting that new home orders are dropping off a cliff, that's when these stocks take the next leg lower. Could RH go down to $100, $150 a share? It could. I'm not going to predict that's going to happen, but it's not out of the realm of possibility. There was a reason I was going to, when RH was around 700, I was talking about potentially buying about like $10,000 of put options in RH. I should have made that move. That was stupid. I didn't. I would have made probably a 5 to 10x on my money if I had done that, if not more than that. But when it comes to an RH, that's just a very volatile stock that's so dependent upon how real estate's doing. Now, in my opinion, is this going to be like an 08 type crash, right? Where real estate basically declines for 5 years straight, which is basically kind of what happened. Real estate started bouncing back in 2012, but real estate basically fell from like 07 throughout most of 2011. I'm not going to predict that. I think this is going to be more moderate than that situation. That was pretty crazy, right? And in the market I live in, Vegas, like real estate prices drop. I mean, some of these homes drop 50+%. I'm not going to predict that, but is it possible that home value could drop 20 to 30%? I think it's definitely very much in the realm of possibility. And I think some of the hotter markets, the markets that have been really hot, are going to be the ones that feel it first. So I think where I live, Vegas, I think where I got another house, Phoenix, Arizona, is going to feel it. Maybe they're already feeling it. They're going to feel it soon. Utah, Boise, Idaho, some markets even in Texas. A lot of those markets, they're going to be some of the first to feel some of these places in Florida. And then after that, it'll kind of just branch out to kind of everything else. And some markets will get hit much harder than others. Some I could see, home sales just completely drying up, and I could see prices falling 20, 30%. Others, it may be like 5, 10%. And, but I don't think it's going to magically fix itself quickly. And so, with real estate, for me, I'm going to be very patient. Is it a possibility I buy some sort of real estate in 2023? I'd call it maybe like a 50-50, but I might be waiting all the way till 2024 to do something there, because when these real estate cycles come along, they usually take quite a while. And I think we got quite a situation on our hands when it comes to real estate. So hope you guys enjoyed this. As always, my perspective and kind of sharing some stuff that's not available out there and some stuff that is available. Make sure you follow me on Instagram. Say hello. Send me a DM on Instagram. I always enjoy kind of interacting with you guys. Much love as always, and have a great day.